In the alternate version of Quick Study 9-6, we're asked to record employer payroll taxes. As you learned in your Learn Smart modules, in addition to the employer recording the actual wages and salaries and payment of that, and also the different various deductions and withholdings, the employer has typically additional expenses as part of having employees. And some of those might be involuntary taxes, so things like FICA and also unemployment taxes, again, over and above any deductions. And also there might be voluntary amounts. For example, while the employee may have deducted or pay a portion of the medical insurance premiums, the employer may also pay a portion, and that would be an additional expense of that company. So let's start building our journal entry and let's start reading through our scenario. Schmolt Company has 8 employees, each of whom earns $1,800 per month and has been employed since January 1st. I'm going to skip some detail for now and figure out what journal entry they're asking us to record, and that's the March 31st journal entry to record the March employer payroll taxes expenses. So we're not asked to record wages or employee deductions. What we're asked to record is the employer payroll taxes expense. So let's start reading through here one by one and build our journal entry. Well, our total expense or cost or additional cost of the business is going to be debited to payroll taxes expense, but I don't know what the dollar amount is until we start building each individual line item. So let's go through here. The first item is FICA Social Security taxes are 6.2% of the first $118,500 paid to each employee. Now keep in mind, some amounts are deducted from the employee, some amounts are additional employer amounts, and some are both. And so sometimes you get some extra information that you have to decipher it if it actually relates. And you may have thought, well, FICA Social Security taxes, I remember that from the previous problem. That's something that I deducted from the employee. So you might think, well, I go ahead and ignore it here, right? Well, this is one where the employee and the employer each pay an equal amount. So the employer also is going to take that 6.2% and multiply it times the wages. Now there's a caveat, and usually there's a limit. It says it's only applied to the first $118,500 paid to each individual employee. So what do I take the 6.2% times? 118,500 or what they've actually earned? Let's figure out whether or not the limitation applies. It says each employee earns $1,800 per month, and this is related to March. If we take 1,800 times 3 months, January, February, March, that's only $5,400. That's much less than the limit we have listed here. So we're going to take that percentage times the actual wages, not times the limit, since the limit is much higher. So let's start building our journal entry. Our first line item, very similar to when we deducted, is going to be a liability account. That's going to be FICA Social Security taxes payable because the employer has not yet remitted this to the appropriate organization. And how we come up with the dollar amount is $1,800 per month. Keep in mind that's not for all employees, that's each individual employee. So take that times 8 employees times the 6.2%, and we're going to credit FICA Social Security taxes payable for $892.80. We would have made a similar entry also when we did employee deductions. So reading through here, FICA Medicare taxes are 1.45%. So similar to Social Security, I'm going to credit FICA Medicare taxes payable, a liability account, for $1,800 times 8 employees times 1.45% is going to give us $208.80. We're also told that FUTA, federal unemployment taxes, are 0.6%, and SUTA are 5.4% of the first $7,000 paid to each amount. Now, if you recall from our previous problem, when we were doing the employee wages and deductions, I said ignore this. Keep in mind, while it's not deducted from employees, it is an additional employer payroll expense. So it is something the employer has to pay. So let's look here. It indicates that percentage is only applied to the first $7,000 paid to the employee. Again, we've got to think about this. Do we apply our percentage to our cap? Do we apply it towards the actual wages? We've got to figure out which one applies in this scenario. Again, $1,800 per month times 3 months means these employees have only earned $5,400. That's less than the cap, so we're going to take our percentages times the actual wages earned. So similar to Social Security and Medicare taxes, state or SUTA is going to be credited, state unemployment taxes payable, $1,800 times 8, because there's 8 employees, times 5.4% for total credit of $777.60. FUTA is similar, a credit to federal unemployment taxes payable, 1,800 times 8 employees times 0.6% gives us a total credit of $86.40. Now, I will note, if you think about it, while we're safe in the month of March, remember this is a $7,000 cap. If, however, we were talking about April or any month after, we would have to think about it because the cap actually would relate in that scenario. So when you see these different limitations, you're going to have to work through whether or not they apply. Now, these, for this scenario, are the only additional employer payroll taxes over and above any withholdings. So we're going to add up our Social Security, our Medicare, our unemployments of $892.80, $208.80, $777.60, and $86.40, and that's going to give us a total additional expense of having these employees that we debit to payroll tax expense of $1,965.60. So the total payroll expense is going to be $1,965.60. While not asked in this particular problem, eventually we would have to, this company, Schmaltz Company, would have to remit these various amounts to the appropriate organization at the time at which they did that. For example, if they pay the Social Security tax agency, they would debit FICA, Social Security taxes payable, lowering the liability for a total of $892.80 and credit cash also for $892.80.